Good evening and welcome to the Bull Market Stock Show. This is your host, Rian Opson, and I do apologize for not actually being here. Actually, yesterday, that has all to do with the load shedding that was happening yesterday. But today, at least, I'm on. I'm actually here to assist where I can. The markets was in the red yesterday. Nasdaq was down. Everything was down. But please, if I'm not on the evenings, I do have a show on Mixler in the mornings on the where you can actually can go on at 10 o'clock, and then you can just actually link up, and that is where I normally give my thought for the day and how basically my opinion on how you can trade actually for that day. Now for now we are sitting actually in a predicament. As I said this morning, I will not actually open up any trades for today, and that is all to do with actually the big news that coming tomorrow. Now that will be breaking point. To be serious with you, that will be breaking point. That is now tomorrow. It's a CPI number out of the United States. That will be breaking point. Now everybody is on the wagon wheel that the inflation number will be bad. That will be tomorrow at 2 o'clock. That is the US inflation that will come out tomorrow. Also, very importantly, there is also the Chinese news that come out at about 2:30. Yeah, at 3 o'clock. No, 3:30 actually. That news will come out tomorrow morning. That is out of China. That is also the CPI number that will be released. That will be released actually tomorrow morning at about 3:30. So please, you have to be very careful. I know the market's in a selling point. Selling point. It's going down. Nasdaq is going down. Dow Jones, gold, whatever. Even oil. Oil is actually below actually $100 a barrel. That is actually good for the consumer, but it's not good for the market actually, because a lot of oil producers are not actually making money. So that is actually a huge problem. Now, the thing is, as I said, breaking point will be tomorrow. And that is CPI number, which basically everybody predicts it will be actually out of hand tomorrow. And that means that the Federal Reserve will have no other choice but to lift up the interest rate with 50 basis points. 50 basis points. And now, this is actually the story. This was now a voting member. I'm just actually sharing my screen with you now. A voting member actually that was releasing this data out today. This is the voting member. Meister is her name. And she's actually said the pace we are going is on the right track. That is what 50 basis points is. Now, if I just actually scroll a bit up, this is actually the words that she actually was saying. We do not rule out 75 basis points increase forever. So, which means she is prepared, or the Federal Reserve is prepared to actually lift up the interest rates. And that's why you see this exclamation mark, that they are prepared to lift up the interest rates now with a 0.5%, and that will be actually on and on. And actually for them actually to lift up the interest rates entirely. There's someone actually giving actually a bit of a comment here. The chart whisperer, oil going down, sell. This is not investment. This is not investment advice. Thanks a lot. And then I was like, no, chart whisperer, I'm good. How are you, my man? Thanks a lot for the comment. I really appreciate it. So this is actually the whole story with Meister, that she said they might actually lift up the interest rates with a 7.5%. And honestly speaking, I must say that is not good. She actually released that comment. She is a voting member, and she will, or I will say, they will actually vote actually to hold actually interest rates. That is now in June, and that could actually disrupt the market, because the market will anticipate the Federal Reserve will go with a 50 basis points or even higher. That is the whole issue. That's why I say inflation actually tomorrow, CPI number, that will be actually breaking point tomorrow. If that inflation number, now this is the calendar of tomorrow. I'm actually just sharing the screen again. This is actually the calendar for tomorrow. I'm just trying actually to hide myself. And also, Chart Whisperer going live again soon. Want to join? Yes, definitely. I definitely want to join that one. Please, Chart Whisperer, send me that that link, and I will actually be joining you live whenever you decide. I will be glad actually if I can attend that. Thanks a lot for the invite. Now, this is actually the CPI number. This guy is actually a guy from Europe. and he's actually writing in Afrikaans. Actually, lekker. That is actually quite strange. Now, this is actually the CPI number of tomorrow. That is inflation of China. So they're expecting a 1.5%, and that is the year-on-year inflation, and month-over-month is 0. Now, I don't know, does this make sense or what? But they expecting actually a very low number tomorrow, and so I'm not sure will that be right, because obviously in China had lockdowns and all of those things. So I'm not sure if the Chinese want to cook their books or what, but they're expecting quite a lower number month over month, and also a downward in inflation with a 1.5. Now that is at 3 o'clock. That is at 3:30. That is now tomorrow morning. Then we're going down to the big one. This is the mother of everything. This will be the inflation year on year out of the United States. Now, this is actually what they expect is an 8.5%. This was the previous number. Sorry, they're expecting a bit slightly softer number of 8.1%, and then your core inflation at 6%. And this is actually the previous number, which was at 6.5%. So they're expecting a slightly lower inflation number. Now, the thing is, will that be true tomorrow? Will we see a lower inflation number? Now, very important with that number. If that number comes out softer tomorrow, let's say, for argument's sake, the inflation number is about 8.1, or I would say 7.9%, or 8%, for example. Believe me, the bulls will come back roaring tomorrow if that inflation number is lower, because then it means the Federal Reserve will actually lower their expectations of lifting the interest rates in June. So they are praying, the bulls, all of us, me, you, everybody else, are praying actually that inflation number is softer, because if that number is softer, then it means the Federal Reserve will not use actually all their tools, which is now the 7.5 basis point. So then it will be actually be lower. Now, there's also a question that goes in here. I'm very sorry. There's a lot of questions that come through. Please drop your questions. I will answer them. So please do that. Why is gold going down? Now, that is all to do with the trend for now. I would not say actually you must continue the trend because of the CPI number that's coming out tomorrow. I would say if you are on gold now, Benny, I would say, and you sell gold, I would say to close the trade and leave it for now. Just close the trade, leave it for now, and let's see what is the news tomorrow. What I actually expect on the data is that, which I will show you now with my charts and everything else, that there's a possibility that inflation might actually go down, and that means that the gold price might go up, or it could actually go down. But I think maybe that will push up a bit of the gold price, and the oil price and all of those things might go up tomorrow because of the softer inflation number. That is for tomorrow. Now, there's another comment that goes through because the US dollar is getting stronger. US dollar is definitely getting stronger, but after tomorrow, we might see actually a bit of a slowdown. I just have this charts that I need to show you guys that I think that inflation will actually go a bit down. Now, there's three things that goes with inflation in the United States. That is used cars, food prices, that is CPI, food prices, and then the food price, and then obviously the oil prices. So those are the three things that goes with CPI tomorrow. Now, the other one that the Federal Reserve is looking at is actually core CPI, which exclude food and energy. Now, let me just go on this one. I'm just actually sharing my screen with you. This is the evidence that I actually compiled for you. I'm just actually going to put this on there. Now, let me show you this. This is now core inflation. United States core inflation. And then we have actually, and then wages. That is the other one that I'm actually putting on here. Now, what I have here is that wages, sorry, I'm just actually trying to move my screen, just trying to get this chart going again. Sorry, I'm just going to make it a bit smaller. A bit bigger. All right. Okay, so now we have US wages and then we have US core inflation. Those are the two things that I calculate here. This is not for core inflation. Now, I'm not saying the US inflation, or sorry, the US wages are with core inflation. But obviously, if people have money, then they can buy luxury goods. Because core inflation is more to do with luxury goods. That is now goods that exclude food and energy. Now, this is actually what I picked up actually earlier today. You can see it actually went up. It went up. I'm just actually going to make this a bit easier. Right. It seems, I'm not saying it is. It seems actually that this is now in black. That is the wages. And in blue is the core inflation. This is the inflation that the Federal Reserve is looking at. All right. It seems that it's actually balancing out there. It's reached its peak and it's slowing down. That is now for core CPI and wages. All right. So it seems that this two, which is now CPI, core CPI and wages, are balancing out. It reached its peak. It's about to flatten and then go down. All right. So this is now core CPI and this is now wages. Then we have another one, which is CPI. As I said, core CPI and CPI is two different things. Core CPI excludes food and energy. CPI includes food and energy. Now, these are the figures that I took from March. All right, March and then April. So this is the inflation. This is what I forecast what will happen tomorrow. All right, I could be wrong as well. Now I took March numbers and then obviously April, but March and then we're looking at April for now. So it seems that if I look at March, this is food inflation that is in yellow. All right, I'm just gonna try to put a chart in there. Food inflation. It seems food inflation. I will not say there's a turn in food inflation. All right, because it can go higher, but that was at 8%. It just goes as a rocket. But the other two, which is used cars and oil prices. Now this in black is Brent. Brent was at 118, all right, 118. This was now in March. And then from there, it actually was a bit softer. I'm not saying with a huge margin, but it's a bit softer, all right? So we're sitting at about, as we saw now, we are between 100 and 110 the whole time. That is now for oil prices. And then we have another one, which is in blue, that is now the used cars that I actually calculated. And used cars takes about 20% of CPI in the United States. So that number is coming down, as you can see here, from the first, actually, from January 2022, it's been coming down. So used cars are actually, prices are coming down since January. The second one is oil prices that are also coming down. And then we have food prices that is going up. So 2 out of the 3 is actually coming down. Now, this is actually the forecast that I have here, where they say actually inflation, it looks like it's going to come out at 8.1. That is now CPI year on year. And we're going to look at core inflation that is at 6.1. And then also month over month, they're expecting about a 0.2%, where previously it was actually at a 1.2%. All right. And then we have core inflation at 0.3%, and then they're expecting about a 0.4%. So they're expecting a bit of a softer number for inflation. That is now, I'm just going to make sure if I don't have it wrong here. Yeah, that is previous and that's forecast. So they do expect a softer number for CPI and core CPI for tomorrow. This is the two forecasts that we have. 8.1, that is for year-on-year inflation, and then core CPI also at 6%. So the market expecting a bit of a softer number for tomorrow for inflation. Now, what's going to happen when we have actually a softer number? When we have a softer number, as I said, the bulls is going to come back roaring tomorrow. They're going to buy the NASDAQ because it looks like also the bond markets, I would say the bond yields will start to come down because it looks like the interest rates are working. So they're going to actually, the bond yields is going to drop. You might get the expectation of oil prices maybe slightly going up. You have gold price go up, NASDAQ is going up, Dow Jones is going up. It will just be green in the market tomorrow. That is actually what I expect. Now, for now, I will not advise you to do anything. Actually, I would say wait for this news to come out, see if the number is softer, and then you go in. Now, let's say I'm wrong. So what's going to happen? If I'm wrong, oh gosh, it's going to be hell actually tomorrow. The market is literally going to go haywire, because then they're going to expect literally the Federal Reserve is going to do anything in their power in June to bring that inflation down. Because you must remember, this is the only inflation number before June's meeting. There's no other inflation number that's in between. So that is the only number for now until June. So if this number is massive tomorrow, the market is going to go in a sell-off, and we might see actually a heavy interest rate hike of 0.5% or maybe with a 0.75%. If we do get a softer number, the Federal Reserve will become a bit relaxed, maybe going to put the interest rates only on 0.25 or maybe less. But the thing is, we will be buying the rumor tomorrow. If the number is softer, we buy everything. NASDAQ, Dow Jones, gold, oil, man, you name it. Buy everything tomorrow. That is if the number is actually softer, but you need to look at the charts tomorrow. Now, Charles Whisperer was saying USD CAD smashed it in the last 3 or 4 days. Yeah, no, look, it was actually been flying up. Just to back at Benny, why is gold going down? Please, Benny, I would advise you rather not. I would say if you can, just actually jump out of gold, because it looks like it can actually turn around tomorrow. That is now with the CPI number might be a bit softer. Why gold's going down is just, I think it's just for now that it's going down for now, and it's a possibility that it might actually turn around and go back up again. So please be careful on gold. My thing is just ran out of it now, close the trade and take your profits and wait for tomorrow for CPI number. I hope you guys enjoyed today's show. Thanks a lot, Chart Whisperer, for the comments. Thanks a lot, Benny, for the comments. I'm sure, Chart Whisperer, you made quite a lot of money in the market with USD CAD. Thanks a lot for everybody for tuning in. I hope you guys have a lovely evening. I'm sorry for the podcast that is taking a bit so long. A lot of information to share with you. All the best with CPI tomorrow. And please don't forget, I will be on at 10 o'clock on the radio show. So please don't forget that. I will give you an update of what I just explained now. That's it from my side. See you guys tomorrow at 10. Bye-bye.